Hi, my name's Kit Moore, and I am the founder of Farmgate Advisors, Inc., as well as the Contractors CFO Team, Inc., companies that operate both in Canada and the US. And brace yourself, I've got a bit of a long one today as to why successful Canadian entrepreneurs absolutely need a corporate strategy for exposure to US marketplace. Let's get into it. There's some complexity going on in the markets, as you're well aware, and I want to talk a little bit about what's going on in US policy, US money markets, US industry, and why Canadians can't ignore it regardless of what you hear from your peers or your elected leaders. So, a couple weeks ago, when the Fed pulled down interest rates, there was a run-up in the 10-year bond. And there were concerns that the bond market might impose some discipline on the Trump team. And that's exactly how I'll refer to it. I won't refer to it as Trump. We'll call it the Trump team, and there's a reason for that. But I thought it might impose some discipline, or I was concerned that it might impose some discipline on US policy because bond markets are so significant. But interestingly, as of yesterday, the 10-year Treasury started ticking down. In other words, while the US Federal Reserve rate, the short end of the curve, has come down, the middle end of the curve is starting to come down too. How would you interpret that? Does that mean a recession's coming? No, quite the opposite. In my opinion, and I've been digging in pretty deep, why that's occurring is because the Treasury Secretary in the US, Scott Bessent, very respected individual in capital markets, hardworking, and on top of this issue is making clear to bond markets that several things will occur. First off, Doji will be successful in eliminating the US deficit. Now, let's say they eliminate the deficit. Could you go back into deficit? There's some possibility there, and bear with me because there's a reason I'm getting into this geopolitics and capital market stuff, but there's some possibility you could go back into a deficit, and one of the reasons is the 2017 tax cuts that Trump put into place, bringing the corporate tax rate down from 28% to 21%, they want to make these permanent. So Doji has a huge imperative to eliminate this deficit, create room to make these tax cuts permanent, which fits into the grander scheme of what's really going on in the US here, which is reshoring US industry and growing America domestically. So when the yield curve flattens, like I said before, the short end of the curve at the Fed has come down, and now the 10-year is starting to tick down after ticking up. The way to interpret that is not that we're looking at a recession, it's that there's a restructuring going on in the US economy, and what the Trump team is doing is they're looking to wean the economy off of the government spending-fueled growth and into private sector-led growth, with the thought being that private sector-led growth in the US will not lead to inflation because it doesn't require the printing of money. So now, if the US economy chugs along through these policies, and admittedly, we're in a high-risk time. In fact, you could argue this is unprecedented stuff. I find it inspiring. Whether you agree with me or not, that's not really the point. There's a lot going on. But when you get into what will happen in industrial markets and product markets, when you're really chasing down this private sector-led growth, for construction entrepreneurs, it's hard to ignore the fact that you are going to be building in America. And so where this takes a turn for Canadians is to say, look, you don't have to give up your patriotism, you don't have to be ashamed of your country, but you do have to acknowledge something. Our policy leaders are complacent. They've already been complacent for a decade. They're not speeding up now. We don't have an operating parliament. The US Trump team is working at breakneck speeds to make this stuff happen. We're hardly responding to a massively restructuring global order being led by this American Trump team. And so you ought probably be concerned that the growth story in Canada doesn't look that great. There'll be pockets, okay? There for sure, guess how? There will be government-fueled growth in Canada, which again is inflationary, exactly what the US is getting away from. So let's take this into business now and get off of this geopolitics and capital market stuff and say, what does that mean to a Canadian entrepreneur? Well, let's be clear. You need US exposure regardless of whether other Canadians look down their nose at you saying that's not patriotic, you have to do this. And furthermore, you could take a step back and say, of all the dominant superpowers in the world, regardless of this tariff threat and how threatening it is to you and your interests, who do you really want to prevail over the next 20 to 30 years for your children? Do you want a Chinese-led, state-sponsored capitalist approach to global order? Or would you like a market-based American approach, uneasy as it may be at this point? I know where I'm placing my bets. And so as a Canadian entrepreneur, I tend to work mostly with construction entrepreneurs, but in a variety of sectors, there are ways to get exposure to that market without giving up on your home base. For example, get your immigration lawyer on the phone and start talking about your visa options. There's multiple ways to expand into the US. Let's say that you're not interested in forming operating companies in the US. You can just be looking at passive exposure through, the stock market. That's pretty risky. Things are rich in the equity markets. Not really the approach I'd suggest. But when you get into strategy, you could be talking about gaining exposure to the US through joint ventures. You can be talking about through direct investment, and the different visa approaches through the US government allow you to structure your investment into the US in a variety of ways. So from a corporate strategy perspective, you may want to find ways to expand into that market. Not because Canada is a write-off right now, but because the US is highly likely to experience rapid growth. And from what I'm seeing from Canadian policymakers, we're non-responsive. Your bet probably needs to be in the US until the Canadian policymakers get their act in order and figure out what the plan is here. And I think one of the reasons you're seeing such a slow response from Canadian governments is because the majority of our industries and our biggest capital holders in Canada have links back to their European roots. And if you were to trace through what the Trump team is doing, it's directly at odds with some of the European central bankers and the large interests in Europe. So I'm pretty pessimistic, frankly, that we're going to see the types of changes needed in Canada. Right? What changes do we need to see? Well, we need to see a reduction in the size of the civil service. We need to see deregulation of several of our captive industries. And the US is already making clear, whether you believe it or not, that they want to get some of their banks operating more in Canada. Yes, they have banks here, but our regulatory environment, which has provided stability, is not conducive to American lending style. And it's pretty clear the Americans are not looking to forge forward on some of these global systems like Basel banking because they can't put their own economy first when they're following these global conventions. So, hey, look, I'll summarize this and say, are we in risky times? Yes. Is it okay if you feel uneasy? Absolutely. The stuff that's going on is wild to some degree. But if you don't have a corporate strategy to gain that US exposure, then you are betting exclusively on a stagnant market that has barriers that aren't likely to come down for reasons I just described, while the US economy, as risky as it may appear at the current time, has a lot of growth potential because what they're up to is rattling markets, and markets are starting to embrace it. Yes, you saw equity market volatility earlier this week because these North American tariffs probably don't make a lot of sense, but bond markets are coming around to the fact that there is a regime change in order and that it might be more logical than you think. So give it the benefit of the doubt. If you're not sure how to address a US corporate strategy, feel free to reach out. Number at the office here is 519-683-1633. Nancy takes the calls out front. She lets me know when someone calls in. You don't have to enter into large contracts with us. Happy to have a conversation and see if you're a Canadian construction entrepreneur, what angles do you take to get exposure to this rapidly restructuring world that we live in. I'd like to work with you on it. If you're interested and this video piques your curiosity, let me know. Have a great day out there. Stay focused, get your results. I believe in you. You can do it.